Wednesday, August 11th, 2021, Maneco 64, home of alternative economics and contrarian views. So, two big events in the last 100 years plus has put America definitely on the road to ruin. The first one, of course, was the creation of the Federal Reserve back in 1913. And the second one was the closing of the gold window by Richard Nixon on August 15th, 1971. And along the way, of course, there were other important events, monetary events, like the closing of the gold standard domestically in 1933 when Roosevelt banned gold ownership. Unconstitutional, I would say. But yes, 100 years of central banking and fiat currency has put America on the brink. And why do I say that? And I have to make it clear that I'm not criticizing America, because every other country never had what America had prior to the Federal Reserve. America became the biggest economy in the world by 1870. It became a world economic power by the early 1900s, all through very small government, all through encouraging the private sector, entrepreneurship. But unfortunately, in the last 100 years, America has made the wrong turn. Yes, it's taken a long time for us to get here. That just goes to show how great the American economy was. And it still is, of course. I won't argue with that. But it's quickly going downhill. Before I look at some data and some charts here, as I usually do, just wanted to quote a former president and founding father, and this is what Thomas Jefferson said. And I think we are pretty much very far down this road, and I quote, "If the American people ever allow private banks to control the issue of their money, first by inflation and then by deflation, the banks and corporations that will grow up around them will deprive the people of their property until their children will wake up homeless on the continents their fathers conquered." So I think that's very appropriate. Think of the Federal Reserve. That's a corporation, especially the 12 regional banks. Think of BlackRock. Think of the amount of people who are out in the streets. Watch Jeremiah Babe for that. He does a great job covering that. So yes, and why am I talking about this today? Well, it just seems that the trillions are coming so easily. Yesterday we saw this infrastructure plan go through Congress. That was just over $1 trillion. Now they're already talking about a new $3.5 trillion budget. We're losing track, right, of the trillions. And to think that it took just over 200 years for America to get to $1 trillion in national debts, and that was in the early 80s. I think even when Reagan took over, it was below $1 trillion, and now we're basically at 30 trillion, and that's not even counting all the other unfunded liabilities like Social Security and Medicare, which now add up to like 155 trillion. This is based on an economy that's worth about 21 to 22 trillion. So things are getting really out of hand. So what is the solution to this government largesse, this ever-expanding big Leviathan government, deficit spending, national debt increasing? Because you need to understand, every time you run deficits, the debt increases. Well, and also the inflation that we have. The solution will eventually come from the collapse of the currency, hyperinflation, and that will pull the plug on the statists, on the central bank. And I think Rothbard talks about this, and he says that actually the people do that. They run away from the currency. They see that there's no end in sight to the inflation, the fiat currency inflation, and that government and the central bank will never stop. And what will trigger that? I don't know, but something will. When will it be? Well, it could be tomorrow. It could be in a year or 2 or 3. I think we're getting a lot closer. It's not sustainable. If you look at historical data, and I've got here from Wikipedia, a list of countries by government spending as percentage of GDP, and you go back historically to the United States, and you can see here that up until 1910, government spending in the US as a percentage of GDP was very low. It was always below 5%. Probably in the 1860s, it was higher because of the Civil War. They don't have the data here. But you can see that after 1910, from 1920 until 2020, it's crept up. And we're now at almost 50% of GDP. So government is taking 50% of the private production and endeavors of the private sector as taxes. And that doesn't even include the inflation. And the inflation is basically the deficit spending. It's what they spend above and beyond the budget. And I don't think we've had a balanced budget since the 60s. It's been 50 years plus. Yes, what happened between 1910 and 1920? Well, you had the creation of the Federal Reserve. What happened in the 60s and early 70s? Well, you had Nixon closing the gold window, and you can see how the red ink is kept going up. The other chart I wanted to show you, and this is from the major enemy of America, in my opinion, the central bank. This is data from the Federal Reserve Bank of St. Louis, or Fed, and you can see how the purchasing power of the American currency has been going towards zero, especially ever since the Federal Reserve was created. And you can see here as well, since Nixon closed the gold window, it's accelerated lower. And show you here in the last 5 years, and especially since the end of last year, it's really accelerated lower. So we are, I think, getting closer and closer to a crisis that will feel catastrophic, disastrous for many, but I think in the long term, it will be a blessing in disguise for not just America, but for the whole world. We'll hopefully move away from big government, from inflation, from central banking, from war. That's the other thing I didn't mention. Look at how many wars we've had in the last 120 years, especially big world wars, of course. And America, I heard someone talk about that America has invaded 100 different countries in the last 100 years. Is that really what the founding fathers wanted for America? I don't think so. So yes, the trillions keep rolling along. Pretty soon they're going to be like the trillions that you had in Italy. I remember in the 90s going to Italy before the euro. You had to spend, I don't know, 5,000 lira for a coffee and a sandwich. We're going to get to that stage, and I think we're getting to that stage really quickly. So Billy just got up and I thought he was going to jump off, but he didn't. So with that, let's quickly look at where the markets are this morning. So it's just before 8 a.m. London time. Let's have a look here. I hadn't even turned on my my system. So we've got spot gold at 1731.60, up just over $2. High's been 1735, low 1724. Yes, we had a pretty big move lower on Friday and on Monday, especially overnight. Gold has now stabilized. Yes, looking at what's happening and what has been happening to the dollar, to the fiscal situation, to the monetary situation, to the fact that a lot of this debt wouldn't be able to be serviced if it wasn't for the Federal Reserve to keep printing money to basically monetize the debt. They don't call that monetize the debt, but that's what all the central banks in the world are doing right now. That's what the German Reichsbank did during World War I and in the aftermath of World War I. Yes, it took years for the hyperinflation to come about, and I think it's only a matter of time that we get a hyperinflation. There's no way out anymore. We're too addicted to government spending, loose monetary policy, Keynesian economics, and after 50 years of especially severe Keynesian economics and money printing, after Nixon closed the gold window, I don't think we have much time left. So what about silver? Silver's up 4 cents at 23.37. Range has been 23.19 to 23.48. So yes, am I concerned about these short-term moves in the paper price of gold and silver? Not one bit. I'm more concerned about the hyperinflation that's coming. And because of that, I'm going to try to hold on as much as possible to my real money, physical gold and silver. If you can get through the next crisis, which will be a currency crisis, because that's what the hyperinflation is, and you still have some of your precious metals, you will have done well. You will be one of the few lucky ones to be able to build up on the consequence or in the aftermath of that crisis. That's my opinion. But the reason I have that opinion because I've read about history and what happens after such events. And people who hold on to paper, their financial situation will be destroyed. People who hold on to real money and hard assets like land and property, and by that I don't mean rental properties that are highly leveraged with mortgages. I mean real outright owned property. They will do okay. And also people who live within their means, who don't exploit this system of credit and fiat currency to live above their means, they will do okay. So the Dow future right now is down 15, the NASDAQ is down 10, and the S&P is down 3. So yes, it is fairly quiet right now. The markets are just opening in Europe. The currency market, we got sterling down 1/8% at 138.25. We've got the euro at 117.09. That's down 0.1%. The dollar's up 0.15% versus the yen, Japanese yen at 110.73. Dollars unchanged versus the yuan at 648.59. And Aussie dollar is down 0.25% at 73.33, and the dollar is up 0.1 versus the Canadian dollar at 125.32. That's the other thing people need to understand, not just in the United States, but all around the world. These fiat currencies fluctuate against each other, and sometimes they seem to be stronger and better than others, but ultimately, they will all collapse versus real money, gold and silver, that is. The FX trading is just a casino, I would say. So, crude oil. Crude oil continued to creep back up. We're at 68.50, up 0.5%. High-grade copper is down about 1/3% at 4.33. And I'll finish off the 10-year yield. The 10-year yield has crept up this week. We started the week up around 1.3%. We're now at 1.37%. That's fairly significant there, the move higher in yields. It's up 2.5 basis points. Of course, that 10-year yield with where CPI is around 5.4%, with where the stock market is, I would have said it should be at 6, 7, 8%. But of course, the Federal Reserve and other central banks have manipulated government bond prices. They've bought government bonds and driven yields lower because that's the only way to keep government solvent, because we have such huge deficit spending and huge national debt that if interest rates were at 5, 6, or 7, which is where they should really be in a free market, everything would have imploded already. So it's interesting that today we get the CPI numbers. My bet is that it's going to be higher than expected. I think in the last 6 to 7 numbers, the estimate has always been lower than the number that has come out originally. So yes, gold and silver, for those of you who have stuck with gold and silver, I would say you've done the right thing. Yes, it can be frustrating, but over the long term, the fiat currency, the fiat dollar, has only one way to go, and that's to zero. And usually the last stage from where we are right now, as you saw on that chart, the purchasing power, the last stage takes a little longer, but when it goes, you can't get out of it. You can't get out of the dollar. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.